The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the January 13th, the magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers have communicated to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But even more important than that, and that's this, during this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send that out to steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on a magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we begin our day with a mixed bag out there. You've got the Dow trading up 152 points with the S&P down 33 and the NASDAQ 100 down 238. The Russell's off 19. Trannies are up 57. Semis are down 68. You've got gold that's trading out at $26.85, that's off $29. Silver's printed out at $30 even. Steven down $1 and a penny. Light sweet crude trading at $78.88, that's up $2.31. Natural gas is basically flat at $3.99. Copper is trading up just a tad. If we take a look at the charts here, so I've got this set up for my white background system. I have been able to solve a number of problems, but then a couple have also popped up here. So we're going to just stick with this system for the day, at least at this moment in time. But what I do have on this set of charts, if you will, that we don't when I use the e-signal system, is I've got our daily TD9 count. So as long as we're here, you can see that gold that's marked Friday was bar number 8 of a TD9 count. It's the high of the pattern. That suggests it gives a 90% probability that it completes that pattern today. It just simply needs to close above the close of bar number 5. That was the close of January 7th, and that number is 2665.40. Now, when you get a TD9 count top or any kind of a top out there, all price should really do at a minimum is pull back to test support. In the case of Goldilocks, the profile level of support is at 2671.30. Its oscillator and change line is just below that at 2667 out there. So that's a likely target. Now, if price closes below that level, you'd be looking at 2635 and 2582. Those are the other profile levels on a daily time frame. In the case of gold, because it has been traded above its slightly bear structured profile for more than 2 consecutive sessions, if it's just a counter trend move to the downside, price would find support between 2635 and 2671. If we look at the weekly time frame chart, we can see we've got a TD9 count top. I can say right now price is just consolidated with inside its weekly profile, but we spent quite a bit of time below that. Now, the interesting thing here about last week in gold is price closed above the center of that bullish structured profile after having been below it for more than 2 consecutive weeks out there. So this suggests that the rally is more than a counter trend move. But if it's really more than a counter trend move, price has got to close above the weekly oscillator and change line. That's currently printed at 2737. From an intraday standpoint, we've got a Rhodes Momentum Indicator pattern that is present. We've got right now what looks like a bull sash candle, but we've got 20 minutes left in the session out here. The low, let me just see if we also have the TD9. Let me just see what this low was, 2679.60 versus 2679.90. Okay, so you've got a TD9 count pattern that would also form as long as price closes below the close of bar number 5, and that close out there is 2685.50. So you've got one of two possibilities. There's a third that it won't form Well, really, there's only two possibilities at this moment in time. Now, with regard to gold and suggesting to you that we've got a intraday bottoming signal, be careful. Why? Because if you look at that 30-minute oscillator and change line, it has contained price. So only if gold is able to close above that on a 30-minute time frame, that currently being 26.89, will that suggest a rally. The rally would then take us to, or should take us to, or towards 27.1550, the 30-minute TD9 count breakdown level. So that's what's going on with gold. Let's take a look at the consumer staples level. The bottom signal out here, TD9 count. So we're waiting for these charts here to populate. That's on the daily time frame. That says that the TD9 count pattern is going to go ahead and complete today. Bar number 9 was on Friday out there. So what should unfold today is you should see a rally. Again, the oscillator and change lines are going to be the key levels here. If you're not familiar with that, if the lingo sounds, just go subscribe to Mastering Probability. It's a workshop there that you can take. Teaches you all about it, how to actually design that, how to calculate it, so you know what it's doing on your chart. So here, this would suggest that price would rally up towards 77.59. Now, the beautiful thing about the TD9 count pattern is that if it doesn't work, you know pretty much right away. And that means any close below today's low, whatever that ends up being, and I won't give you that right now because that might not be the day's low, then that would signal that you have a strong momentum move to the downside. And that's where the that's where the monthly TD9 count pattern that we're looking at on the very right-hand side, I think Stevie is going to switch that. That's got a TD9 count pattern, and that would suggest lower price. The weekly is also saying the same thing. When I say it's saying the same thing, last week price closed below its breakout level at 76.89. So that suggests lower price out here. So the XLP, how do you put that together? Because you've got an intraday 30-minute chart that shows Rhodes Momentum Indicator bottom. How you put that together is there's likely to be a counter trend rally inside the consumer staples level that should take us up towards the 77.59 area, based upon the monthly and the weekly charts out there. What else do we have with a possible signal? We've got that Great British Pound. Let's go ahead and pull that up on our screen out here and see what that's doing. That's going to go ahead and complete a TD9 count bottom pattern today. That says in a daily time frame, as soon as the chart populates and shows for you, it should rally towards its oscillator and change line. The oscillator and change line is printing right now. It looks like at about, come on, we're populate already, at the 1.2323 level out there. So you got a completed TD9 count bottom. Again, if the low of today gets taken out, means a close below, then because we don't have a bottom signal on the weekly chart, we do have price pulling back to a breakout area. That's at $1.20, 1.209 to be exact. So what is this telling us? This suggests that the Great British Pound is likely to also have a counter trend move as well, with price running the resistance towards that $1.23. Lastly, we've got Apple that's going to go ahead or likely to form a TD9 count bottom pattern today. So let's go take a look at it. So here's got, the TD9 count pattern. Oh, that was bar number 8. So the TD9 count pattern is going to confirm today. It will complete tomorrow. That means you could see lower lows inside of Apple. So I want to just take a look at the weekly chart out here. The weekly chart shows prices trading below profile support there. So there's nothing there to stop us. And the monthly chart out there shows you've got potentially Rhodes Momentum Indicator top at the end of the month, possibly a TD9 count top as well. I don't see an intraday signal on the 30-minute to suggest a rally. So, but Apple's going to go ahead and complete a TD9 count bottom pattern tomorrow. That should lead to at least a counter trend move up towards should be a decent rally up towards the 247 level. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. So just got to wait for this one set of charts here to go ahead and update, and we'll take a look at really the first question that came in. This morning it was from Brent in Martinez, California, and he was really asking more about a general overview of the indices out there. So I'm just waiting for this monthly chart here to complete, and then we'll be on our way. Don't know why it's taking so long, but it is. So hope everybody had a great weekend out there. I did go see the Bob Dylan movie out there. I'm a Bob Dylan fan. Well, I thought the movie was good. Tons of write-ups about it. But it seems like the write-ups either love it or you don't love it. I didn't see love it or don't love it, but thought it was a good movie out there. In any event, so let's go So Brent is asking about the just kind of a general overview. So I think what I was going to do, if I'm not mistaken, I was going to start with this. This chart here, which is really the Dow. And so what we've got up on my screen right now is you've got a yearly time frame, monthly, a weekly, and a daily. So the daily is really just going to be kind of like the noisy chart out there. But if you take a look at the weekly time frame chart, here's what we know about the Dow. We know that the Dow had, if we're taking a look at the very bottom panel, very bottom left, we know that the Dow moved higher for 2 consecutive years out there. We know that markets, we take a look at the tempo of the markets. We take a look at signals or typically patterns moving in 2 to 4 type of segments out there. It's not unusual to see the market, if you have two years to the upside, maybe a year to the downside. But when we take a look at the Dow, the last up, so for example, as an example, 2016, 2017, 2 years to the upside, 2018, a year to the downside. When I say a year to the downside, not a bear market, just referring to we didn't have a consecutive higher close out there. That was a one-hit wonder. And then we went on for 3 consecutive yearly closes to the upside, 1 year to the downside, which was 2022, and now we've 2 to the upside. So it's conceivable, it's easily conceivable that price could move to the upside out there for a 3rd consecutive year. So we'll keep that in mind. How will we know that? Well, we'll start trading above last year's high. So it's got a ways to go before it does that. Now, we go take a look at the monthly time frame chart. It's only January the 13th. But what we can see here is as of January 13th, we have price that is trading below its oscillator and change line. That's going to be the key number on the 31st. So if we take a look at Stevie's calendar, can I do that? Not. Yeah. So we've got two solid trading weeks. The 31st happens to be a Friday. 2 solid trading weeks. If in fact two solid trading weeks at the July 31st, we close below what now is printed out at 42,265. We'll use that as just kind of a guideline at this moment in time. But Brent, if we close below that, when was the last time we closed below the oscillator and change line on a monthly time frame? Well, if we come back here and we take a look at August of 2023, was that closed below that level? And then we moved lower for 3 consecutive months out there. Again, 2s and 3s are ways, 2 through 4 really are consecutive moves to think of inside our mind. So that's going to be perhaps one of the most important data points out there. Now what's going on in the daily and the weekly out there, of course, we'll pay attention to that. But it's going to be that monthly oscillator and change line. Why is that? If we close below that, that tells us about a change in trend. Look, we're already trading below the low of the day after election day. We're doing that inside the Dow, inside the S&P 500. I wish I had my e-signal charts. I could pull that up. We could all take a look at that. This second term of President Trump is way different than that first term that's out there. And we've had that 2-year rally. And so maybe those things that he'd like to do, well, he's going to have it's going to be there's going to be a timeout, so to speak, out there. But I don't know the answer. I don't know. I can't tell you where the Dow is going to close at the end of the month. So we have to really wait and see. Now, we take a look at the Dow and the cash indice. I think I was looking at the future contract maybe for the ES and the NQ, and they didn't trigger the A to B equals CD pattern on the downside, or maybe it was the Dow equity future contract. That is not the case with the Dow Jones cash indice. It has triggered an A to B equals CD down both for its daily time frame, for its daily time frame and its weekly time frame. And that price projection gets us down towards, don't quote me to the number, 40,400 and something out there, with its TD9 count breakout level being at 39,251. If we look at the daily time frame chart, again, it triggered an A to B equals CD pattern. It negated its Rhodes momentum indicator signal. That was a signal or a pattern that formed out here on the trading day of January the 2nd out there. We had a couple days rally, but the most important thing out here, Brent, that we can learn is that price rallied into that oscillator and change line on the daily time frame. That is now acting as a significant level of resistance. We talked about how it had been acting as a significant level of support on the monthly time frame. And the monthly gives it up. Well, then from a long-term standpoint, those that have long-term retirement accounts, you got to start taking a look at what do you do here? What do you do there? Not that I can identify where price is going to go. We'll take a look at breakout levels, that's for sure. So in this instance here, if these A to B equals CD patterns that are present don't form, the target levels become those TD9 count areas. Now, in a daily time frame, let me just pull the daily over just a tad. You'll see that we've got that A to B equals CD pattern down in the 40, less than 40,500. But at 39,993, you've got a daily breakout level. So that's a possibility that that's where price is headed to. Now, in the short term, I'm not saying we just, markets don't just move to the downside. We got the 2 days to the downside, 1 to the upside, 3 or 4 to the downside, a couple to the upside. We have a Rhodes momentum indicator signal that is present on the daily time frame, Brent. So that's something to keep an eye on. If we do get a bullish reversal candle, that would confirm that bottom signal. That would then suggest that price would rally up into its oscillator and change line, currently 42,571, and that would be the sell. So how do we put this together? Well, the very first thing is we've got confirmed A to B equals CD patterns to the downside inside of the Dow, even though it's rallying today. That pattern is what is there present. You've got the monthly time frame that's saying watch out 2 weeks from now, because if I close below this level, that's going to be a signal that we are headed lower out there. And you might say headed lower for how long? And Stevie will say probably into the March, April, May type time frame out there. But, we'll take things one step at a time out here. So the Dow is signaling, Brent, I know you were getting some confused. You were wondering, is there a 3 drive to a bottom pattern inside maybe the ES Mini or what have you? And we'll put those charts. In fact, let me go and switch over. So that's the basic scenario with regard to what we are looking at least as of January 13th out here. The next thing that I can do, I'm going to go ahead and put up, I think I've got the daily trading daily equity future contracts. Okay. Stevie's just getting used to this as well. So now we take a look at the Dow equity future contract. It also has a Rhodes momentum indicator signal. See the oscillator and change line, again, panel 2 from the right, has acted as resistance. So if you get a bottom pattern, you would expect to rally up into that level, 42,775-ish. And then we see a move lower. In the case of the ES Mini is triggering an A to B equals CD pattern to the downside today, or so it appears. Let's go take a look at it. If you give me a moment, I do have this working now again, at least, so I can just draw the lines. Well, at least I thought I did. Oh, it's function 1. Sorry. I do have it. Just Stevie's hitting the wrong key. Pain in the... Okay, so let's draw in the A to B equals CD pattern of downside. Here is A to B. I'm just simply going to go ahead and move this over to the C point, which is the highest high after that B point forms. And 1 to 1, we're not that far away from it, around 59.72. This will be session number 3 to the downside. Maybe you get that A to B equals CD pattern that completes, maybe does more than a 1 to 1 tomorrow. What you're looking for here, though, would be a bullish reversal candle to give you a move that price is going to at least form some type of counter trend move and try to rally into what would be resistance, which right now for the ES Mini, the first level would be 58.98, the second would be 59.55. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This market has turned red, Tigers, and the question we should be asking ourselves is how to position for a potential bear market. Plenty of gains can be made in bull markets, but if we've entered bearish territory, that strategy needs to change. So, how do we pivot so we can see green in the red? Join Larry this month, January 10th and 24th for live trading action. You'll sit next to Larry as he places live trades, explains his methodology, and answers questions live. Larry brings his decades of trading knowledge directly to you, teaching you how to navigate this shifting market. Go to the front page of TFNN.com today and secure your spot fast for live trading Fridays with Larry Pesavento. Happy New Year, Tigers. We'll see you January 10th and 24th. TFNN. Educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We're taking a look at the Hang Seng Index. This is for GTE. His question is, has the Shanghai or the Hang Seng basically bottomed? No, I won't pull up the Shanghai only because it takes too much resources and times, but that went ahead and formed bar number 9 of a TD9 count pattern today, so that says that pattern should complete tomorrow, and you should see some type of counter trend move. We got bar number 8 that completed today in the Hang Seng, so that says that we've got a bottom between today and Wednesday, and that should also lead to a rally towards 19,441. I believe this is more likely just a counter trend move out there. Really depends where we close for the week. On a weekly time frame chart, if the Hang Seng closes below the low of November 29th, that low is 19,054.40. That's going to trigger an A to B equals CD pattern to the downside. Don't know where that's going to take us, but the next level of support to the downside would be at about the 17,853 level out there. That's its a monthly oscillator and change line. So the answer to your question is, has it formed a bottom? The Hang Seng should form a bottom between today and Wednesday, and the Shanghai, I believe, is at bar number 9 today, so it'll complete that pattern tomorrow. So hope that helps you out. As always, thanks so much for your requests. The next request coming in from Hector and Patty. Hector there and Patty, they're doing fine. I knew that they lived in Southern California. Wasn't sure exactly where. Luckily, it's just luckily for them, at least at this stage of the game, it's 60 miles northeast of San Diego. Not that they're not subject to fires out there, but that is a disaster. What can we say? In any event, let's take a look at the GNRC. It's disgusting, really. I mean, wow. We take a look at Generac out here, and basically Hector is saying it looks like a nice bottom that is forming. So if we look at the daily time frame, what we know about the daily time frame is that it has a TD9 count bottom pattern. That remains in effect unless price were to close below the low of December 24th out there, Christmas Eve, and that would have been at 152.15. Price closes below that, well, that pattern will go away. What that has led to, the daily bottom pattern, what that has led to, Hector and Patty, is a consolidation with inside profile levels. That's between 153.83 and 160.57. So I would say at this stage now, it's a bullish structured profile, so price is traded into the buy zone. That's between 153.83 and 155.52. So it's traded inside that buy zone. All we know right now, the daily chart, is that we just have a consolidation pattern with inside profiles. Now let's look to the weekly chart. What kind of signal do we have here? All that we have here is price pulling back and testing its breakout level support at 152.42. That has been tested for the last 3 weeks out there. Maybe even we got down to it today. What was the low today? Let me just see out here. It was 154. Oh, hold on. Too fast. 154.56. So we didn't test it today. Do we have to test it? No. But it's a level that's really important, right? Because we know we've tested it for the last 3 weeks and it's held. So that's another level to watch, because if price closed below 152.42, that's going to signal that we're likely headed lower. Now, headed lower to where would be the monthly chart. Its level of support would be at 150.36 out there. And below that, around 142, 141.96 is where the oscillator and change line is currently printing. So I wish we had a bottom pattern, and yes, pulling back to a breakout level can be a bottom pattern with regard to the weekly time frame chart. What we don't like is really last week's action, Hector, and that's because price found resistance at that 160.57 level. Yes, we closed above it for 1 day. That would have been Monday, Tuesday. That would have been Tuesday of last week, but we got right back below at the very next session. So I would say not until price closes above 160.57 is there any sign of any kind of significant-ish type bottom out there. And that's what we see when we take a look at Generac out there. Today looks like it could potentially be bar number 3 to the downside. So if you get the downside move today and tomorrow, you'd likely to see a rally if for some reason you wanted to take some type of short-term play out there. So hope that helps you out. Thanks for letting us know that you are all right out there in California, that beautiful state. Let's go take a look at Nike for Duncan inside the Tiger's Den. Duncan, during the break, what I'll do for you is I will go to a set of charts and put up gold. He's asking about did gold top, and I'd mentioned just simply we talked about that during the very first segment out there. So I'll put those charts up there. You'll be able to see those. With regard to Nike, though, and I think you just wanted me to take a look at Nike. I can't find it, so I'm just giving you my take on what the charts are communicating to us. So I'm going to start with the monthly time frame chart. The monthly time frame chart shows that we are trading below profile support and a red oscillator and change line. Profile support right now is 74.46. That's not a good news. That suggests lower price. And you can see that oscillator and change line has really acted as a resistance for quite some time out here. If we take a look at the weekly time frame chart, we're trading below profile support. We're trading below its oscillator and change line. Now, what that is doing here is this is testing a swing point. We're trading into the swing point on a weekly basis from August 9th. That swing point did volume of 52 million shares. More importantly, 70.75 is the low. Did we get below that this morning? We got down to 70.78. We missed it by 3 pennies. That's not a test of that swing point low. So I can't say we would have a test and rejection. Volume back then was 52 million shares. So far today, in just a few hours of trading, about 4 million. So kind of hard to extrapolate what the actual volume would be. There is a Rhodes momentum indicator signal is present. And that doesn't care about volume. If we did get a weekly bullish reversal candle, then Nike would say, okay, I've made a bottom. That bottom would then take us up towards the 81.88 level. That's the top of the profile on a monthly basis and that key oscillator and change line. Now we get to the daily time frame. So the weekly is potential. The weekly is saying be careful. I'm sorry, the weekly says potential. The monthly says be careful. However, volume-wise, so we're halfway through the month. So it was 250 million shares in August of 2024. This month we're at 78 million shares. So light in the loafers with regard to volume, even on the monthly time frame. Now, we open up this daily chart out here, and the reason why I need to pull this back is there an A to B equals CD pattern to the downside? The answer is there probably is. It's a small one within probably a larger one, and it looks like this here. The A point is going to be the high from December the 6th out there. That would certainly be one. This is probably another. The B point we can use is December 20th. And I just moved this over to the C point, which was a one-day rally out there. Whoops. See if I can grab this line out here. And we move that over here. Then, yeah, if we get a bullish reversal candle, and right now I get a bullish engulfing candle, you would get at least a short-term buy the D point. Now, you've got resistance up here at 72.87. It's a new profile that's formed, by the way, on a daily time frame. The buy zone inside of Nike is between 71.58 and 72.15. The sell signal, or the sell where the sellers are located at the top of the profile, 73.85, and you've got 72.87 that can act as a resistance level. So yeah, it looks like the daily could be setting up to give us a bit of a counter trend move out there. You need a confirmation of a bullish reversal candle on the weekly time frame, and on the monthly, no signs of any kind of a bottom there. So hope that helped you out, Dunk. When we come back, let's go take a look at INMB. We're going to take a look at Bitcoin. We'll take a look at Wolf, natural gas, and I'll see if any other requests have come in. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets. with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Let's look at ticker symbol INMB having a beautiful day today. Trading out at 672, nice wide-ranging bar, taking out its TD9 count top. So this formed a daily TD9 count topping pattern. The high of it was bar number 8 on January 7th. It went ahead and completed that pattern on Friday out there, and it just simply has negated it in one session. Dan, this is a signal of a strong momentum move to the upside for its daily time frame. Next likely price target, I would say, would be its TD9 count breakdown level. That's up at $8. Again, you're trading at 679. But you do have one level of resistance that this is going to have to contend with. That's going to be that monthly oscillator and change line. So printed at 697, we'll just call it $7. So it looks to me like INMB wants to make a move towards $7. If it can clear $7 out there, I don't see anything on the daily time frame, and it kind of signaling anything. In fact, what you're getting really is an A to B equals CD pattern to the upside also. Bar number 8, again, that high of the January 7th bar did volume of 489,000 shares today. So far, you're at 677. So you've got another pattern in there, the A to B equals CD. That'll give us a price objective. Let's draw in A to B out there. This should be a nice one. And this comes back to the low on Friday out there. So the one-to-one move is 696. Now, this is coming off of the C point with vengeance out there. A nice wide-ranging bar. And I don't even need to know the retracement level between the high of bar number 8 of that TD9 count and then the low from Friday out there, because that could be a 61% retracement. But when you come off of a C point like this, it tells you about doing more than a one-to-one price projection. So you'll have to do those expansions yourself, 1.272, 1.618. But that's what the daily time frame signal is providing you and I, that this thing wants to move higher. I don't see anything else to report on here, so I believe you're probably in that trade. So nice for you, and hopefully they achieve their outcome. You have quite high hopes. Well, I tell you, you're off to a great start right now. But 7 and 8 looks like they'll be next up. Pete D inside the Tigers Den wanted to take a look at Bitcoin. So let's pull up Bitcoin. And the question was, I believe, did it bottom? And the answer there is no. I don't have a bottoming pattern. Now, I've got the January Bitcoin contract up on my screen. It's got an A to B equals CD pattern that ought to take us down towards the 85,000 level. If it does that, or gets as it nears that level, should it get down there, then we would be looking for some type of bullish reversal candle to generate a Gartley buy pattern. It's likely to head down lower. I take that back. The weekly chart here for the January contract has price, has support, I should say, or a buy zone that is between 89,693 and 93,884. Key number there is at 89. 693 level. If we close below that, that's going to indicate that we're likely to head lower. And we've got that A to B equals CD pattern that would certainly take us below that level. So I do not see a bottom pattern out here. Of course, Bitcoin can do anything that it wants to, but to answer your question, I don't have the bottom pattern signals out there. So I hope that helps you out, Peak. And let's go on to the next request out here, which was from Alton, who wanted to take like a ticker symbol WOLF out there. So, and he's looking to get in on a bounce. So I'm going to start with the longer-term time frame first. On a monthly basis, price has been below its oscillator and change line ever since October of 2022. Right now, that number is printed out at about 964. So you know that no matter what or whenever, should you ever get into the trade, a long trade on Wolf, you need to see price closing above and staying above that oscillator and change line. On a monthly basis, we are in bar number 8. That says between this month, January, and March of this year, you could get a TD9 count bottom pattern. The last TD9 count bottom pattern that formed failed immediately out there, telling us about a strong momentum move to the downside. On a weekly time frame, Wolf is trading below the bottom of its profile. It has a Rhodes momentum indicator signal that's triggered. It needs a bullish reversal candle to confirm a bottom. Short of that, price is likely to head lower. On the daily time frame for Wolf, there's no bottom signal here. It did at one time have a Rhodes momentum indicator signal. That has gone away. This tells us about strong momentum to the downside. So no, I do not see any kind of bottom pattern inside of Wolfie, WOLF for the daily, weekly, or monthly time frame. And I would go fishing in a different pond out there because this has got some work to do, even still to the downside. This was at 140 back in, I don't know what this even is, but it was at 140 in November of 2021, and now it's at $4.88 out there. So hope that helps you out, Alton, at least from the standpoint of doing some bottom fishing. Don't go doing bottom fishing there. This looks like one big grouper that's just going to stay hidden. Let's go take a look at natural gas. This is for Joe. He's looking for an entry into the UNG. What I can share with you, that's not it. Not that I don't mind looking at that, but that's not where Stevie was going. I was going here. So I did take during that break that we had, I did take a look to see what the holdings were inside of UNG. And at this moment in time, they are completely the February contract out there. So you're looking for an entry signal into UNG. That entry signal is going to come from watching the futures contract. Looked like a beautiful day today as price gapped up. Gapped up to about $4.30 and basically has sold off ever since. Now, that's not such a big deal, but to sell the D point top, that actually went ahead and formed on December 31st when we got that bear sash candle. Bear sash candle, when you identify resistance, it would be the high of the pattern. Well, that would be the high of the day before. That was December 30th, and that high is at $4.20, 4.201 to be exact. That's what price has to close above, and it could do it at day's end to negate that signal. But as long as that signal is present out there, Joe, well, then that's going to suggest that we could still see a pullback. Where would that pullback likely take us to? I would say it would take us towards that oscillator and change line, currently printed about $3.71. So one potential buy area would be UNG pulling back towards $3.71. Now, I offer you just a bit of caution out here, and a bit of caution comes from the weekly chart. And the weekly chart says there's likely to be a TD9 count top between this week and the next two out there. The monthly is saying, I don't know what you guys are talking about. Well, we know what we're talking about. So let's try to narrow this down. First, with regard to a potential entry out here, I would say around the $3.70 mark. The 195-minute chart, if we pull this back, why did price stop where it did today? If we're looking for an answer to that question, all we have to do is turn to the 195-minute chart. Well, that's not what I normally use for natural gas, but it just happens to be what I've got out here. But it does, and it's got a TD9 count pattern. So this is suggesting lower price, $3.82 to maybe $3.70. 65-minute is what I use for cash type indice type charts out there, anything that trades for 6.5 hours. But I'm not going to go change this out there. It doesn't really matter. It suggests that we should see a further pullback out there. And then, because that TD9 count top for the weekly could be this bit of time between this week and the next two, maybe what you get there then is some type of rally. And we don't have because the monthly chart is ready to rally out there, just needs the daily to really help. So two different ways to take a look at this. If you were able to get a close above the high from December 30th out there, $4.20. That's going to lead to one heck of a rally, and maybe you try to catch a momentum train, but wait for a pullback towards 370. So hope that helps you out. That was Joe. We come back from this break. I think the only request that I have, but I'll continue to check, is for ARM Holdings, ARM. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We're taking a look at ticker symbol ARM, ARM Holdings out here on a daily time frame. ARM Holdings had a nice little TD9 count bottom pattern out here, rallied right up into TD9 count breakdown, resists at 146.64. Looked like it was going to break out of that. That was a one-day wonder. Now what we've got is price trading below its red oscillator and change line. As for Dunk, we trade below a red oscillator and change line. Tells us our price oscillator is, we have a falling price oscillator below zero. Those are bearish conditions. That suggests that a close today below 136.74 is likely to lead to lower price. This would be day number 2 consecutively to the downside, so likely to see 2 more days to the downside. If you look at the weekly time frame chart, price has not been able to get out of, is run into resistance at the level where counter trend rallies would end. That's at 152.04, something that we talk about. That's how we utilize those bullish and bearish profiles to our advantage out here. So we're trading below profile support. that's adding to the idea of lower move. And we've really got kind of an inside-ish type bar on the monthly time frame. So the monthly not really helping us out at this moment in time. I would say more likely than not, we're likely to see a further pullback. If I look at the 130-minute time frame chart for ARM, you can put this up on your screen. You'll see a TD9 count top up there. You'll see that this is testing a level of support. Its profile 135.32. A close below that says 125 is in the cards out there. So that's what we have. We take a look at ARM Holdings. Let's finish this off for Dan and take a look at BBAI. Get those charts up on our screen here momentarily. Daily time frame, BBAI is suggesting that it wants lower price, trading below its profile level. Bar number 5 today. If we take a look at the weekly time frame chart, Rhodes Momentum Indicator top confirmed last week, trading below its oscillator and change line. And that suggests a move back to 270. If we get below 270, we're looking at a $1.81. So it looks like to me BBAI wants to continue to move lower. Watch that 270 level out there. Folks, great to be with you, as always. Stay tuned for all the great programming. I'll be back at about 3:15 or so with Jacob. And then I'll see you tomorrow at 11 a.m. sharp. So have a marvelous Monday, and we're already off to a good start. Take care. Be right back.